track moves 1,000% from my entry to the highs, I expect to make about 500 to 700. I'm not going to catch it all, but I expect to make the vast majority of that trade. That's the way that I trade. That's the style that I do, system that I use from one level to the next level. It's very specific. And so for me, when these large moves occur, my focus is, okay, I am ready to capture it. I'll be there to do it. And I know that what comes along with that is 2 or 3 times a week, I'm probably going to eat a break-even stop loss or a small stop where I had profits and I could have sold, but I decided not to. And I think even once you get starting to trade with bigger numbers, it can become a little bit even more staggering. Like there are times for me where I'll be up $10,000, $15,000 on a trade, and I'm aiming to make 50 or 100, so that 10 or 15 is inconsequential to my end game. I'll sell for I will sell none of that position. I'll watch it come back down and stop me out for a minus $5,000 loss or whatever the case may be. And I'm fine with that. That's part of who I am. That's part of how I trade, because I know on those days where those large move comes, when people are like, man, I sold so early, I'm gonna be like, well, I might have sold a little bit late, but I caught most of that move. That's just the way that I operate. And I think that, again, it's just fascinating to me. That's why I asked about the FOMO, because it's, no matter what style of trader you are, there's going to be differences between what I do and what you do and what you do and what you do and what you do. And it's just so interesting that you can succeed with all these different methodologies, right? And at the end of the day, what it really comes back down to is which one works for you. And once you make money, can you keep it? That's what it really comes down to.
Also, I think scaling out, that's actually helped me as well.
Mm-hmm.
Like before, I would say 3 years ago, I would scale into trades. I never really scaled out and then just increase my stop loss and take it from there. But recently, I would say the beginning of last year, actually end of 2022, I started scaling out of trades. Like take 30% off, then take another 20. Once the strike is in the money, just hold the trade until I get stopped out, like trailing stop. That has actually helped me hold a lot of my winners much, much longer. And I've seen a lot of people even who have smaller accounts, right? And I tell them, like, if you scale out properly, you can, like, imagine holding, like you mentioned, SPX and SPY. They give us these one move once a week, right? Where you see premiums going from like $2 all the way to like 40, 50 bucks. Now, if you have 3 contracts, you scale 2 out with 50% profit, that last contract, just imagine holding it to 20, 25, right? At that point, you're not thinking emotionally. You're looking at the chart because you've already taken out a lot of your capital that you initially invested, and now you're only risking very small amount. Now, for you to go red on the trade when you've already taken 50, 70% off, or let's just say 50% or 30% profit, right? That means that there's a big, big issue with your trading setup. If you're up 50%, you've closed half of your position, and you're bag holding and now that turns red, you need to go back to the drawing board. There's something really going wrong with your trading.
Yeah, I couldn't agree more. And I think the one note that I will give to my particular emphasis on holding for larger moves and everything about that also is very specific to the asset class that I'm trading, which is options, right? I think if you're somebody who's trading futures or trading Forex or something, it's going to be a little bit different because options, the way that they move and the volatility that they have and the leverage, there are these opportunities, and they do not come frequently and you don't plan to catch them and others, but if there is a chance where a contract can make a move where you make 1,000% return on your money, right? That's not going to happen in Forex. It's not going to happen in futures. Like, it's just the way the leverage works, it's different, right? And so I think one of the other bigger reasons that I do try and hold for these bigger moves is because I know the power of the asset I'm trading. So that also plays a role. If I was trading futures, I think that my style would be different because I'm not trying to hold something to make some crazy percentage. I have a very defined, okay, this is, so I think that, because on some of the trades I take, if you can hold them well, your R multiple can be 10 to 20 R, right? And it's not like you're doing anything crazy. It's just the way that options work. That can also hurt you a lot of times as well. But I wanted to kind of make that note that the way in which I trade is also definitely impacted by the asset that I choose to trade. I think that if I wasn't trading options, my mindset on holding for these larger moves would probably be a little bit different.
I like that. You have to trade differently depending on the asset class.
Absolutely.
Because options are priced based off of time. So
yes.
With a lot of people is they can't even get direction right. They can't call if it's going to go up or down. So now once you can't call that out, now you have to worry about time. And with time, that's when he gets those big percent gains, is when he's right on direction and right on time. And a lot of beginner traders can't get the direction right first. And that is why I firmly believe futures are the best instrument for beginners to trade, because number one, it's easier to manage risk. And it could even be Forex, just S&P 500, NASDAQ. They're the most liquid markets in the world. Easy to manage your risk. And you don't have to worry about time as you do with options. But if you time it correctly, there's no better percent gain than options. That's undeniable.
I completely agree on the beginner thing with futures. Options are something, trade for 2 years. After you've done 2 years in any other market, futures, stocks, Forex, then come back to options. Then we can start to see about how you'll do that.
Right. Options are priced too because of volatility. So back in COVID, I traded strictly options. I didn't even trade futures. And I made the most amount of money back then because there was easy volatility in the market, and that's what options love.
No, definitely. One thing I was going to ask you guys actually is obviously being so profitable for so long and trading for so long, at this point, are there still moments where you make adjustments to your plan and to your strategy? And if so, what do those adjustments look like?
So we're in Miami recording this, right? It would be stupid for me to come here with a winter jacket on like I'm in New York right now, right? So there's different conditions in the markets that are constantly changing. You know, you're not going to go outside in New York when it's snowing out with no shirt on. You're going to freeze. So in the market, it's the same thing. You know, you have to adjust and wear different clothes or strategies or components that you need to tweak to fit the market conditions. And I think that is something that I never did, or any beginner trader never does, is they don't put an emphasis on the conditions they are trading in. When the market has no volatility, you can't be expecting 1,000% gains like he's going for. If the market has volatility, then you could adjust to fit how you're trading to capitalize on those gains.
Adaptability is important in trading, right? Market's never going to be the same. It's like a tide in the ocean. Not every tide is going to be the same. You have to adjust to those tides that are coming in. And if you don't change your, like the opening range breakout, the textbook setup for that is you wait 5 minutes and you take it. That hasn't been working recently. You tweak it up to 15 minutes, maybe 30 minutes, and you have a higher success rate, right? So these small changes are something you're going to have to learn to make to your trading. And I actually learned that from working out in the gym, right? Because not every single workout works for everyone. So you have to make these small changes. For a certain person, you might have to wait 2 minutes before your next set, while another person, he might be okay doing 60 seconds and going back in. And just like that, you have to learn to change your trading strategy based on the market, which is changing. I think every 3 months, 6 months, you have market that shifts a little bit. It's ranging, not giving clean plays, and it starts giving a lot of clean plays. So you have to be able to learn how to, view that change and adapt to that change.
And this could be also on an intraday basis too. Let's just say you're looking to short a breakout above a high, but you see a ton of buying activity, flurry above that high. Well, you have to change with that new information and either develop a new plan, not take that trade, or go with the flows of the market. And I think there's change not only on a broader, higher time frame sense with trends and different volatile conditions, but also on an intraday basis too, on just simple price fluctuations in the first couple hours of the market too.
And that could be an edge for a trader, right? Being able to adapt to the market super fast.
I think a big thing for me is I simply just try to go with the flows of the market, and I don't go into the market every day saying, okay, I'm going to be bullish, or okay, I'm going to be bearish. I simply say, okay, if buyers appear here, if sellers appear here, I'm going to go with those flows. I never try to predict. I'm adapting to the information the market's providing me, and I'm going simply with those flows, never against it. Because once you go against the wind's going to take you away, and it's going to be hard to go with the wind once you're away from it.
There's an age-old phrase in life that says, only the strongest survive. In trading, I actually think it's only the adaptable survive. And you saw this a lot last year when, SPY, QQQ, the market was ripping up, and you saw these people that kept trying to short the top. They couldn't accept the fact that the market was going up, and those people likely are decimated right now because they couldn't be adaptable to what the market was bringing. So whether it's intraday, whether it's on a broad basis, I think adaptability is the best thing people can do. And a lot of times ego gets in the way because a lot of us, especially as beginners, think that because I think it's going to go up, it has to go up. Because I think it has to go down, and I like trading puts, it has to go down. When in reality, we need to take what we see in the market, go in unbiased, in my opinion, and trade on what we see. Trade the chart, not your heart, another phrase I like. That's, I think, the best trait a trader can have, and something that will not only help you, right, in times of when the market is uptrending, downtrending, ranging, whatever, it'll help you keep a lot of money too in the long term.
I think a big thing too is that if traders can accept uncertainty in the market, there's no certain answer. Like if I'm buying something, I don't know if it's going to keep going up. I never know if trade is going to work until it works or doesn't work. Like I never know if I'm going to profit or lose on it before I enter it. So if you could accept that uncertainty, you're going get rid of your FOMO. You're going to get rid of your hesitation. You're going to get rid of 90% of the emotional problems if you just accept the unknown and you become comfortable with any unknown possible outcome. And the market's going to present thousands of possible outcomes, and nobody trading that will know if it's going to go up or down.
That's why you have to go in accepting that you can lose whatever money you go in with. And it becomes harder to trade at that point.
Well, and what helps with that too, I think, is a lot of people, if their strategy's not working, they'll try to switch to something else. Well, they try to switch to something else, either A, too fast, or B, with way too much size.
How do you define not working?
So for me to define not working, I'd say, like, let's say they take 5 trades in a row and they lose every single one of them. They'll think, I need to switch to another strategy. I need to try something new, hopping edge to edge. When in reality, like, let's say what you're doing isn't working for a week or a month, right? You're just losing trades left and right. I think that the only way traders should try something new is with extremely low size. 1 share of even SPY, 1 contract of SPY. So let's say you're trying something new, right? There's not really risk on the table. Too many people try new things. They try to switch up their edge. They try to, fix their psychology by adding more size, by, making more. When in reality, it should be the opposite. I think that until you fix your losing streak, if you have to adapt, it has to be with like the most minimal amount of size possible. Even though you're not really going to make any money, you're also not going to lose any money.
Yeah, I think you need to give it a little bit more time than 5 trades, right? Obviously not with size, right? You shouldn't be going with your full account. But I think you need to give it a little bit of time. When I first started trading, I did a lot of back testing, which I think in the current trading industry, people don't really push. And I'm not talking about going on demand, going back, and testing 1 trade at a time. I'm talking about the old school back testing method where you would, put down your method of entry, your stop loss, your exit, and it does a back test of a whole year, and it shows you, all right, we took 1,000 trades. Out of 1,000 trades, 900 worked out, the other 100 didn't, or 900 didn't work out and only 100 worked out. That tells you that strategy isn't working. And I think when a strategy isn't working for you, I would start sizing down very aggressively, meaning if you're going with $1,000 position size, go down to like 300, 400 and trade and see is it actually your strategy or is it you, right? A lot of people are not able to differentiate between their strategy and themselves. Like they could be having some, issues outside of their trading life, right? And they don't realize that subconsciously that issue is actually getting in the way or clouding their judgment when it comes to trading. Like now they're hoping a lot more than often because they might need the money or they just want to constantly make X amount of money for whatever reason. So I think you need to give it a little bit more time, just like even working out. You got to go into the gym for 3 weeks before you see some progress, right? So I think 2 to 3 weeks is where you should see if the strategy is working and size down and also be able to differentiate between, is it you, is it the strategy, right? And if you can differentiate between that, then you know what part to tackle.
I just wanted to clarify something real quick. I agree 5 trades is not enough to define a strategy. It's just something you see a lot. Like, someone might learn from Rake for a month and be like, oh, I lost, he sucks. Come over to me, I lost, he sucks. Go to, he lost, he sucks. Like, like you were saying earlier with mentor hopping and group hopping and signal hopping, like people lose a few trades and they think, oh, it's time to change something up. Yeah. The whole point I was making was that if things are going south, just size down dramatically.
Yeah.
No matter what, that'll help.
How do you guys feel about signals? Do you guys feel like a lot of people following signals is detrimental to finding profitability? Do you guys think it helps?
I don't think it works.
I don't think it works. Going to do the adaptability thing real quickly. I had one final thought on that real quickly, if we don't mind.
I just thought about it for 15 minutes.
Just because my answer to that is very specific and unique, which is that I think as a person you have to adapt to the market. My strategy, I personally don't adapt at all. My strategy is something that I look for very specific things. If those specific things don't occur, I don't trade, and I don't change those things. I don't adapt and be like, oh, this is the only thing that I've ever said about adapting for me is either the market is hot and I'm looking to try and capture big moves and I'm looking to ride the momentum, or the market is cold and I am taking the same setups, but I'm lowering my expectations. I'm making sure that I do not keep an eye. I'm more focused on just executing well than making a big dollar value. But adaptability is just tough for me because I think it leads into strategy. It's like it can sometimes cause a byproduct of strategy hopping when that's not what should be happening, right? The market goes from a period where it was trending for 4 days in a row and you had clean trades, and then it goes into a range for a week, and all of a sudden, whether let's even extrapolate the numbers, it's trending for a year, and then it goes into a range for 3 months, right? Very normal things for a market to do, any chart to do. People will then say, okay, I now need to adapt my strategy because the market's different. It's like, no, the market's doing one of the two things it always does. It's either trends or ranges. It's the only options that we have. Rather than adapting your strategy, you just need to adapt your expectations. And I think that is the only thing that I will ever adapt for the rest of my life. I will never use a different strategy. I will never look for a different setup. I will never consider other analysis. It just, not that there's anything wrong with it, just I know what I do. I know it works. I don't need to do anything else, right? Will it fail? Absolutely. But I also know it'll work. The only thing I need to adapt is the market hot and should I be trying to capture full moves? Is the market cold and I should be trying to take what I could get and get the hell out of the way? And for me, that's a very big and key thing because especially once you have a strategy, I'm not saying you can't tweak things here or there or there's not small differences here or there, but if you really have like your system and it really works, I don't think you should be adapting the system. I think you should be adapting your expectations to what the market is going to offer you.
I think what majority of us were saying was the position sizing.
No, completely agree.
And expecting, all right, market is not giving us a lot of setup, so size down or wait a little bit longer than usual to take trades. So yeah, obviously you don't want to, change your whole strategy up just because its market is not working or, it's range bound. But at that point, sizing down would be the best bet because a lot of people can't stay out of the market.
No, for
like
sure.
me, I show up every single day. I love the challenge. I love, seeing if I'm going to take the trade, if I'm going to mess up today, how well can I control myself from continuing to over trade. And I think that's one of the reasons why I love trading overall. It's that challenge.
Go back to the signals now.
Yeah, I think that was something for me. I think that it really, there's pros and cons because I think if there's an expectation from somebody that, hey, I'm going to come in, I'm going to follow an expert, I'm going to mimic their trades, and then I'll make a bunch of money. It's an unrealistic expectation because trading has so many variables amongst it that no matter if one person says, I'm buying X, and then you buy X, and then something happens, their emotions are going to react differently to then the person who's following it. Those account sizes are not, there's too many different variables, right? I think that where a benefit can come is from trade reviews, some sort of insightful educational information that's like, hey, I have a lot of students from my program that are like, oh, Jake took this trade today. Like, why do you do that, right? Like, what was the setup there? He's like, this works, that works, blah, 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 blah. But it's hard to find a middle ground because I think we can all agree if you're somebody who comes in and you're like, hey, I'm here to follow signals and I would like to make a bunch of money. We're all going to be like, well, you're probably going to lose most of the money that you do this with because it's not going to work that way, right? But I think that if the end game goal is some sort of review the trades that I took today, I think that offers a lot more value. And I think that offers something that people can actually kind of take away and learn from and say, hey, here's what I did today. Look at you now, take that information, learn from it, all that, as opposed to, hey, here's what I'm doing right now, mimic it. I don't think that will ultimately end up work.
But how many people do you think actually watch those trade reviews? Realistically speaking, right?
Our number, it's higher than, originally I had fears that they were very low. It's higher than I first thought, but it's also lower than you want, right? Because it's like if you have an expectation where you say you have 100 people in a room, right? And you're saying you make a trade review and you're kind of like, oh, I'd expect all 100 people to watch it, right? Like that's team. They know that's okay. Hey, this is so valuable to me. I'm not missing a single one. Sometimes I forget to post a trade review and I have people on my back when it's been 3 hours and they're just like, where is it? I need to study it. Like this is part of my routine. This is part of my process. So that for me, I think is the biggest value add would be, here's the trades that I took today. What can you gain in information from those trades?
And I think those 20, 30 people are the ones who actually do well in trading.
They're going to ones who make it anyways. Exactly.
The other 100, 200 that don't show up, they don't get anywhere. They just go from your chat to his, mine. And then it's just like a pony go round, right? It's, all right, who am I picking this month? Who am I picking next one? That's how it goes. But because they're used to the spoon feeding, right? They want that easy stuff handed to them, and when they don't get that, right? They just, rather than taking the blame, they blame the other person.
I think it's this is something I've been very vocal about. Jake went MIA. We've talked about it. So I'll just speak without him here because I hate signals. Personally, like what we do every day is live trade. I know that both you guys have live trading of some sort too. And I think for anyone watching this, no matter who you're live trading with, either them, myself, Rake, that your best value isn't going to be from, getting a signal at 1.0 and waiting for an exit at 1.2. Your best value is going to be, hey, what is Usman doing? Like, why is he taking this? What is Carmine doing? What does he see? Why is he taking this? What is Jay Dunn doing? Why is he taking this? And then applying it to your own trading. Obviously, live trading is cool. Like, some people like signals. I personally think they're the dumbest thing in the world. I don't know if you guys have met someone, but I've never met someone who truly was like, I'm never going to learn. I'm only going to take signals, and I've made money for a year straight. I haven't found them yet. Maybe you guys have found them.
Nope.
I'm still looking. So all these people that do small account challenges, and they're like, I'm going to start this with $1,000. Everyone's going to be at 10,000. I'm still waiting for them to produce one single person that's like, I took this 1,000, made 10,000, withdrew the 9,000 profit, and now I'm a great trader. I don't think they exist.
I know people are going to hate me for saying this, but unsubscribe from every single signal service that you follow. It's just setting you back, and I know I'll probably get hate for that, but I'm trying to use my following and my message to change, hopefully, the trading industry, because there's a lot of fakeness out there. But if you need somebody to hold your hand, number one, you're not going to build confidence. And I think with trading, you need to have confidence. And holding somebody's hand, once you let go of their hand, how are you going to know how to walk if you've been holding it the whole time? So that's signals. As far as live trading goes, I think people try to combine signals with live trading, and it sets a lot of traders back, and they're basically trying to walk up the steps with the weighted vest on. It's just going to be a lot harder, and they're walking backwards because what they do is they watch somebody live trade and they try to find exactly where he's buying and exactly where he's selling. But there's more value in understanding the thought process of that trader so you can reverse engineer it. I think a lot of success will come from the reverse engineering aspect to how you're trading. So that way you can say, okay, Carmine's watching this. Why is he watching this? Not, hey, Carmine bought here and Carmine sold here. It profited on that trade. Carmine bought here because he found buyers here and the market kept going up. There has to be a reflection aspect to it, or an educational piece to it, other than just holding somebody's hand.
Yeah, I think that, and when you're on live, right, I don't know about you guys, but we go over like why I'm getting in, and I focus a lot on that. Like, hey, look at the volume, pay attention to this. And I think this is your 14th mastermind?
Yeah,
15th?
14th, yeah.
Right? So I started doing in-person classes back in 2018.
like $500,000.
Close. We're not there yet, but close.
Which is crazy.
It
It
is
deserves
crazy.
to be celebrated.
Thank you.
That's badass. Similar story. We talked about this on our last podcast. I was up like $930,000 in the year towards the end of the year last year, and I wanted to get to $1 million. Like I was like, I want my first $1 million year trading. I let the goal of money get to me instead of what I was doing that worked to get to 930,000, and I went down to about 840 on the year. I lost like 80 grand or so, and that was like in the last month, and that sucks. Like still like 800 grand plus in a year, working a few hours a day is incredible. But the psychology side going into this next year was like, I got to size down and really go back to my roots of what got me to that success. And so far this year, I'm only up like $68,000, like a little under 70,000, which still is like 2,000 a day trading and is great. But the whole point of saying this is that, I didn't go into that drawdown and think I have to make this back. I went back to my basics of, what has kept me a profitable trader for years now. I'm enacting that this year, and eventually when the time is right, I will size up again. Hopefully, if I do things right, get to that $1 million point. But if not, I'm following what works for me and making and keeping money. So whole point of saying that was if you're in drawdown, I always recommend sizing down. Not trading when you're in a bad headspace, take some time off. There's no amount of money you're gonna make, whether it's divorce, death, disease, whatever's happening to you in your life. We all go through stuff. Trading is not going to make that better. If anything, it's going to make it far, far, far worse. And in my opinion, you can't trade and you should not trade unless you are 100% mentally okay. And I stand by that really firmly.
So I kind of went through something similar. It was last year in, I think June. I was traveling a lot. I was in Dubai for 2 weeks. And during that month of June, I had so many drawdowns, and not just in trading, but mentally also, because the time difference, going back and forth. I was in London as well for 2 days or 3 days. And coming back into trading, the first week I couldn't kind of figure out what was going on. So I wasn't really taking the blame. I was blaming the market, like, all right, it's the market. The market's shit. And, after that start of second week, I realized it's not the market, it's me. I'm literally all over the place. My time is all off. I'm not waking up on my usual timing. I'm not charting like I used to. I need to size down at this point. So when I started sizing down, I was able to get my confidence back. And I realized that drawdown affected my confidence. And I think as a trader, that's one of your biggest assets. When we go through drawdowns, and if it affects our confidence to the point where we're not able to take the next trade, you have to size down. You have to take a step back. I don't usually take off from trading. I still show up just because I kind of want to be in sync with what's going on in the market. If I don't show up, I'm not going to pay attention to the news. I'm not going to pay attention to what's happening overall in the trading community. So for me to show up and not take trades, that's what actually helps me. And sizing down, like Jaden mentioned, that's the key thing in trying to get your confidence back in the market.
That was fascinating, though. Just not to cut you off before you go, then, but one of the things you said was that it was in Dubai when you were traveling and all that. And I think that there's this really popular notion out there of like traveling and trading and all that, which I know that there's some out there who thrive in it, and I think that's more probably because of the type of person they are, right? But for me personally, when I travel, it's like trading sucks. It's almost like it really like I don't mind it, and I'll do it because I want to show up every day. I want to keep in my rhythm, right? But like it's really like it's almost like it's like trying to work from a vacation spot, right? Like if imagine you're in your 9 to 5 and you tell your boss you're taking a vacation, and then they send you emails and they're like, hey, no, I need you to do this. And you're sitting on vacation on your laptop when you have normally you're used to a big screen. All that. It's the same thing. Like it really is. Like for me, like I'll trade when I'm on trips, I'm doing that, but that's vast majority of the times when I'm not in the right headspace, it comes because I'm not in my routine. I'm not at my place. I don't have my screen. It's not that the screens at my home make me better. It's that I'm in my zone, right? And I'm like there, I'm like, nothing can get in my way here, right? So I just thought it was really fascinating that usually periods of drawdown can oftentimes stem from traveling too much, moving around, not being in the right. I just thought it was really fascinating.
No, I still trade when I travel, but it's not the same at all.
No,
I size down very aggressively just so that I can stay in sync with the market.
Exactly.
I was mentioning to him yesterday, I'm a very lazy person. So he said, no, you're efficient. It's a different word that we came up with. But I like to stay in sync. So if I'm going in with, $30,000 position back home. When I'm traveling, it's gonna be 5, just so that I know what's going on and I'm forced. All right, I gotta get back. I'm still disciplined to showing up. And am I making millions when I'm there? No, it's not possible. So I think that is a big misconception as well in the trading community, that you can travel and trade it. It's tough, right? Because at that point you want to enjoy. You don't want to be focused on it. If you had a losing day, your vacation's fucked.
It's crazy because that's like the number one marketing tactic of a lot of like the ad running gurus. They're like, come quit your job, come trade from the beach, you're gonna make millions. And like, I don't know a single trader. Like, obviously all of us can trade when we're traveling. I'm sure we've all done it, but you're not. I haven't met someone. I personally am not in my element when I'm traveling or trying to enjoy vacation and trade. You can do it, but it's not like that's like the preferred spot, at least for me.
I mean, it's pretty hot on the beach. I don't know how they do it. I wouldn't be able to focus.
I don't know.
Wi-Fi sucks too.
Aside from one person, Z, the traveling trader, I know he's very, very good dude. But aside from him, I don't know anyone who like literally constantly travels and trades and like performs as best as they should, as much as they should. Like it just is it's a very hard thing to do. And so I thought it was fascinating that a lot of our drawdown stories all kind of stemmed from, whether we were traveling, whether we were out of the routine, whatever the case may be, that's what led to the drawdown.
But on a side note, before you go, if you do go to Dubai, right? I don't know if you heard Umar is opening a Blackline trading.
I've heard
so you
that,
have a setup there now.
Yeah,
so I'm excited that I can go there and I'll have a setup and I
Yeah.
can trade. Maybe not my usual size, but much smaller.
I don't know about you guys, but when I'm traveling, I don't want to open up any computer. I want to be able to enjoy.
Says the man who pulled his computer out a little bit.
When I don't have my normal setup, I feel like I don't trade as well or efficient. Like you said, like if I don't have this on this screen or this here, then I feel like I'm just all over the place. I don't know if that's just me, but I don't know. But as far as drawdown goes, I think drawdown, the biggest thing with drawdown is even if you have a repeatable strategy, something that you could repeat daily, you're still gonna go through drawdown. But I firmly believe that drawdown forms for 2 reasons. Number one, not adapting to the current market conditions, doing the same thing over and over and over and not changing depending on what the market's presenting. Or number 2, emotional problems or emotional barriers. And like you guys said, when you guys travel, I would say the root cause of the drawdown is an emotional damage from traveling. You're not at your comfort zone. So the biggest thing is if you're in a drawdown, look at, are you making stupid trades that should be avoided? If it's that, then it's not so much the adaptability aspect to it. So if you're making dumb trades, you're FOMOing in, you're hesitating, then yeah, it's probably the emotional aspect of what's causing the drawdown. But if it's not that, then it's probably adjusting to certain market conditions to make your strategy fit that. For me personally, I still go through emotional challenges. Like I still make stupid trades and stuff like that I know I should avoid. But the biggest thing for me is just simply tweaking one little thing to my strategy to making it fit those market conditions. And it could be as simple as sizing down. It could be as simple as entering when I would stop out. It could be as simple as delaying my entry and waiting for really perfect confirmation. But it could be such a little tweak could turn you out of that drawdown. And that's the 2 main things is adapting to market conditions. If it's not that, then it's an emotional problem.
I think one last thing with drawdown that I really want to emphasize more than anything is to embrace it. As much as that sounds a little bit weird, I've never learned a strategy from it, but someone I consider a mindset mentor for me, Mike Spinoza, Trade Like Mike. And one of the lines that he's talked about, I think you and I talked about this a little bit too, was trial by fire. It's the concept back in the day, right, where if you want to become impervious to walking across hot coals, you got to do it. You have to walk and your feet have to get used to it. Going through drawdown is part of life as a trader. So I don't want to say be like, just write it off and be like, oh, it's okay, it's whatever, I'll get out of it, right? No, you need to go through, you need to examine what are the causes, everything in between. But on some level, embrace it, because it is part of the thing. It is part of that fire that will make your skin so thick and so impervious that in future situations, it won't hold you back. Drawdown that I faced 3 years ago in the way that I handled it, and then drawdown that I faced 2 years ago in the way that I handled it, and drawdown I faced a year ago in the way that I handled it, all of those experiences contributed toward my ability to get out of that January drawdown that I just had. If I didn't go through those, and if I didn't learn, and if I didn't actually have my skin start to become a little bit more flame resistant, then when I was in flames in January, I wouldn't have been able to put them out. So you have to like on some level accept that this is part of it, put your boots on, get ready to go to work the next day again, and get ready and accept that drawdown is a part of what you do, and that you can actually turn it into, with enough experiences in drawdown, eventually it will be a skill. It will be something where now I know how to handle this. All right, I'm down XXX over the course of this month. No biggie. I've been there before. I show up every day. I keep doing what I'm doing. I'll get through it, right? And I think that it's a very, as much as it's counterintuitive, sometimes when trading sucks, you need to embrace the suck. And you need to accept that, well, this one day might help me.
I think you have to go through it to get through it. And I think embracing it is key. And the greatest lesson for me was actually a loss, because I look at it as a win, because I learned so much from that it helped me avoid stupid decisions, and it helped me know that I just felt this pain that it brought, and I cannot feel this again, and I got to do everything to be disciplined to not feel that thing again. So you have to go through it to get through it, and the greatest lessons and the biggest wins will be your losses.
Yeah, your setbacks, they can, if you learn from them, they can slingshot you closer to your goal if you pay attention to them.
100%. And off the back of drawdown, in terms of trading, I wanted to go into a bit of it's kind of outside trading a little bit, which is, of course, every single one of you is a big figure in the industry, right? And with that, you have your education.
Few life events that have happened in my life where I feel like anybody else would have just been like, I'm not even gonna go anywhere near this guy. You know what I mean? And she was always there, no matter what. And I know like a lot of people online, like they're very critical about somebody with money and then the person they're with. But to me, that was never a question, because I mean, my wife, she's an influencer. She has a lot of famous people that follow her, to say the least. I mean, athletes worth hundreds of millions of dollars, who are willing to give her everything plus more. And she's always been by my side, never folded, not once. So, like I said again, after all of those experiences going through that with her, she's always been by my side. I knew like this was the one that I need to lock down. I want to start a family with, and it was probably one of the best decisions I've ever made in my life.
Definitely, no, and it's incredible to hear. And in regards to social media, especially not only in the trading space, but also generally, it's a very toxic environment.
100%.
Right, very toxic environment. And so what's it like, and the thought process then of sort of like sharing quite a lot, had like the family, for example, or even your daughter, for example. What's your thought process around that?
I mean, I find social media as a way to document, so like, especially like early on with all of my FTMO videos, seeing like the payouts, the 30,000 payout, the $100,000 payout, you know what I mean? It's nice to look back and see where I was then and compared to where I am now, and if there's been any growth along the way. But I mean, with social media, I don't really have like an issue with, sharing my personal life. Plus, I feel like people need to understand that like I'm also human too. And because I feel like there's a big misconception that a lot of people have. It's like that I'm super unreachable, that I'm like this person that a lot of people like put on a pedestal. But it's like, I also live my life. Like it's the only difference is I just work super hard and I just try and provide the best I can. But I mean, with social media, like especially when it comes to my wife, like that's something that she's always done in the past. I mean, she was a huge YouTuber, so it's not like anything has changed for her. And for me, the only difference now is that I share my family life and I share my relationship. That's really like the only difference. The one thing that I do like dislike is I know you have a bunch of fake pages too, for sure, right? They use pictures of me and my family on those fake pages to scam others. That boils my blood when I see it, because it's like, what a disgusting type of person you have to be to use pictures of like an innocent little girl who's just born into the world to try and go literally scam people for their hard-earned money for absolutely no reason. Like it's just that's one thing that does like get me mad. But other than that, it's like I like documenting, you know?
Definitely. No. And you're completely right. You know, that it's absolutely insane that people would do that. You know, and just
But-
generally making fake profiles is terrible.
Yeah,
going
but you
to
know
that
what? To
extent.
be honest, like I feel like the people that allow themselves to get scammed by these individuals are just simply ignorant. Because especially in my case, like I say it all the time, like this is my only page, and not just that, I'm verified. You know, so if you see John Wick 32, you know what I'm talking
Yeah.
about with my pictures that says Lambo Raul on them, you're gonna allow yourself to get scammed by this individual. It's kind of like I know a lot of people aren't tech savvy, but it's kind of like
I know, yeah.
you know.
Well, think about it. If you're trying to get into the trading space, but you're getting caught out like that, you probably shouldn't be in the trading space.
Yeah,
You know?
literally.
Especially if, like you said, John Wick for you. Imagine if it was John Wick for me or John Smith for me.
Yeah,
with
100%.
the way I look, and they still fall for it. You know,
Yeah,
it's
bro.
insane.
100%. Yeah, and like the thing with the trading space, a lot of people try and get in, and it's like You know, so I was able to, in total, I had made $170,000 of profit on the account, but then I took some losses and realized 140 grand worth of profits at the end of the 30 days. And with the 70% profit split, I made like $104,000 what my payout was. And not just anybody could do that out of luck. You know, that takes real skill, and that alone should have showed you. Now imagine that was 2 years ago or 3 years ago. So I now have an extra 3 years of experience from those days. And that wasn't even just like my first payout from FTMO. I had been getting payouts 15, 20, 30, 40, even $50,000 from FTMO. And again, all of that is, I have it all on my website too.
Well,
It's
interesting
all there
enough,
for you to go
obviously,
and
as you
see.
can imagine, we're doing research beforehand to think about what questions or topics to talk about. And
course.
that's why I went through your highlight, for example. And one of my guys actually, he's over there. Yeah, one of my guys was on Twitter. And they actually, you remember with FTMO, you could post the stats,
Yeah.
right? So he pulled up the stats of the
Yeah,
100,000
It's on my
withdrawals.
website,
So I was looking at it. I could see, obviously, I think you'd done a bit of drawdown, bit of break even to begin with.
Yeah.
Went up to, I think it was 20, came back to break even.
Zero,
right?
yeah.
Back to zero. And then it went up. And then you had like 30K days followed by like 10K days, lost
Yeah.
days, 30K days. So I saw the whole thing. And so it's there. And then you documented it on YouTube as well.
Yeah.
So like when you see these people, because everyone now, obviously back then the prop space wasn't as big as it is now, right?
Of course.
But the prop space now is massive, and a lot of
huge.
people put weight into people's payouts.
Of course.
So then when you hear people say that you're a fake trader or faking withdrawals, but yet then you have this documentation from before.
Exactly. Like that's because a lot of people can say whatever they want about like trading on an unregulated brokerage. You know what I mean, with the fake withdrawals and all that other stuff. But I even go as far to the extent as showing the withdrawal. Like, for example, I'm in the process of recording a YouTube video right now. So we had spoke about it previously. On Thursday, I had closed out of a position of $134,000. I withdrew $107,500 from the trading account. And on the YouTube video, you literally, even on my Instagram story, I posted it. You literally see me do an internal transfer from the trading account all the way to my